Ever wish you had your own personal bank right in your back pocket? You might be closer than you think. This is a situation many first-time homebuyers and even more seasoned movers face, not having enough cold, hard cash on hand to close on a home purchase. But what if I told you there's a treasure trove you've been filling up over the years and it might be time to take advantage? No, I'm not suggesting you dig up your backyard looking for hidden treasure. I'm really talking about your 401k, your little nest egg for the golden years. In some cases, you could even borrow from it earlier than retirement and then pay yourself back. So this would be one of those situations. So picture this. Your 401k is a bank, you're the lender and the borrower. You're essentially taking a loan from yourself. You withdraw the cash directly from your 401k account, and then, like a diligent debtor, you pay it back over time, typically within 5 years. But remember, your 401k is not a magic money tree. The money you take out will stop growing in terms of potential investment returns until you put it back. And here's the cherry on top. When repaying the loan, you also pay interest, which rather than lining the pockets of some far-off banker, goes back into your very own 401k account. So you're essentially paying the interest to yourself. Now, isn't that a fun twist? But we know with every superhero, there's a villain. So in the case of this, it's the risk associated with your 401k loan. If you've been due to your job or receive a pink slip, you're typically looking at a quick fire repayment of that loan that you took out, often within 60 days. Miss the deadline, and your friendly 401k loan then transforms into a withdrawal. And you know what that means: taxes and possibly early withdrawal penalties. So then it's like being invited to a fancy party, but you have to pay for your own drinks. Not so fun anymore. So in the same vein, the money you use to repay your loan, including the interest, has already been taxed and then will be taxed again once you retire. So your 401k might look like an attractive pile of cash, but remember, it's not as simple as grabbing a shovel and digging. You have to be aware of the potential impact on your long-term retirement savings and the risk of a big unexpected payment if your employment status changes. Chatting with a financial advisor before making such a decision is like buying a map before starting a treasure hunt. Highly recommended. So here's a quick recap of the things to consider when you're thinking of embarking on this journey. Each of us has a unique financial fingerprint, and the decision to borrow from a 401k should be taken after careful consideration and is preferably under the guidance of your financial compass, a financial advisor.